Everybody, Double P here and welcome. So this is going to be for my Platinum X Power Option traders for the coaching call that we have for tomorrow. Got a few questions about the Adobe trade on Friday. You can see the time now is September 17th, 2022, roughly around 9 o'clock at night that I'm cutting this video. So those of you that are maybe watching this on social media like YouTube or whatnot, this is the date that I'm cutting it. I got a couple questions from my members about how did I get into the Adobe trade, what was I looking at, what did I see, and how they could have stayed in the trade to get a little bit more profitable. So the first thing I guess I should do is pull up the Adobe trade itself. So this is what I sent out to my members. So it was about to open September 16, 2022, 290 strike put. I blur this out because that's just for my members only, and the amount of contracts we blur out. Sorry there, I still got the Rona. Got that Rona cough. So looking for plus 25%, minus 15%. These expire today, so don't hold them, all right? So that was the trade. So let me put that down over there. So it's pretty simple what I was looking at. As you can see here, I'm on a 6-month, 1-day chart. I'm on the 2-day, 5-minute chart because I'm going to explain to you what I saw with Adobe and why I took the trade. So this is the 15th of September. You see where Adobe opened up. Adobe opened up, let's see. Sorry, Adobe opened at 323.33. So I want you to look at a couple different things. Look at the 200 and look at the 20. So this is the 200. I got it on a Hull, by the way. I don't use exponential. I don't use simple. I use Hull. I want to speed this up so I have a kind of a concurrent, if not a kind of forward-looking indicator suite that lets me get into a little bit of a position early on. And this is the 20 right here. So watch this, because you're seeing what I'm seeing. So throughout the day, this is what Adobe did. And Adobe is volatile, very volatile beast. Very volatile, very volatile. So this is the end of the day. So let me draw out two things here. I'm going to draw the volatility. I'm going to draw, first of all, support and resistance. So I'm going to draw the box for you first so that you see why I took this trade. And you guys all know the box. If you don't know the box, join the course and you'll learn the box. For those of you that are members, you know what the box is. So from 3 o'clock, let's look at this. What would be the high print here? A high print at 3 o'clock was roughly, I'd say it was right here. So we're going to mark off the high. Where was the low? The low is either the low print of the candle, or it can be the 200, whatever's lower in that last hour. So right here, it's a 200, is very low. So I'm going to mark it off right around here. That's the low. And then when did Adobe, what did it close at? The close was 308.50. So we go to 308. 308.50. And I can adjust this. So for now, so let me adjust this. Let me edit it. For you precision traders out there. So there's our volatility. There's our volatility channel. So now I'm going to draw the box for that volatility so that you see it. So we come over here. $308, 308.50 to 294. So I'll draw this over here. And what I'm going to do is I'm going to extend this so that you guys see it. So let's extend this, activate it. So there's our box, right? Now, let's drop down so that you see what's going on here. Let's drop down now. So we do our, let's go 1 day, 5 minute. So let me ask you a question first. This is yesterday, and then today. A couple of things I'm going to ask you. My traders already know this. This is called the no trade zone. This is called the volatility box. This is called you're going to get chopped up in this particular zone if you take this particular trade. If you do take this trade, you'd be looking at doing a spread. You can do like a put spread. Or what you want to do is in pre-market, you can short this stock. Now, I know it's $300 stock, but the principle and the fundamentals and the strategy and the technique is this is a short. And this is a beautiful short, and I'm going to explain why to you. If you're going to take this trade, you want to come out here and you want to short Adobe. Why do you want to short Adobe? Because of the module that I have, which is called staircase and ski slopes. So here is your 200 right here. And here's your 20 right here. Do you see the ski slope pattern that just developed? And this is the slope, like a cross-country slope. This would have been a beautiful short in pre-market had you had taken it, because it was a high, but because of yesterday's data, right, it's pushing down on the 200. The 200 is pushing down on the stock, and the 20 is pushing down on the stock. This is massive overhead resistance. This is what this is. This is resistance. This is overhead supply and resistance. This is pushing down on this stock, right? The 200 is pushing down on this stock. The 200 is a granddaddy moving average of them all. The 20 is the next dominant because it's intraday and it's pushing down on the stock. Had you taken a short position right here, look at this beautiful short position right there that you would have had, right? Because it's sloping and pushing down. This is a classic ski slope pattern to the downside. And you see the price action, or you can call this an escalator or a staircase to the downside. This is a classic pattern that I teach that's inside of the course, that if you get this right and you understand the fundamentals of the box, because that's where it all starts, the 20 and the 200 and the box, the volatility box, because you can see the price action channel right there. You understand that, you can print money every day, all day long. So when I decided to take this trade, I saw this in pre-market and I just said to myself, this is just gold, right? So when I got into this trade, I sent this trade out to my members roughly around this area right here, probably like 9:33 or whatever, or sorry, 9:36. Let me be clear. 9:36. That's when the trade went out. So let's look at 9:36. Right around here on this candle, right around here, that's when I sent out the trade, right? So this is a beautiful move right here, 5, 10, 15, almost a 20-minute trade to the downside. You can't beat that. You don't need to be in a stock all day. You don't need to be in a position all day. Matter of fact, the longer that you're in a position, the more your capital is at risk in a bear market, right? You took this pattern, you took this trade, you took that, you're out, right? And you seen I got out very profitably, plus 28%, I think it was, when I sent out the text alert to my guys. When I got out, what time was it? 9:57? So right around here, I got out. Was there some chop here? Absolutely. Because it's Adobe. Adobe is a volatile beast, right? But getting out profitably, sorry, right here, let me be clear here. That's the move. That's getting out, right? So look at the 200. It's still pounding on this stock, and look at the 20. Now you're in this tight volatility trading price zone with Adobe, right? When I saw this, I said to myself, I'm going to get back in and I'm going to get the 295 puts. And I showed that across social media because you can go to Facebook and you'll see it there. So if you're watching this on YouTube 6 months later, a month later, a couple weeks later, you'll see when I got in and when I got out. So I decided to go back into Adobe once again. And I wanted to get the 295 puts. Well, what did I do? So let's draw the volatility map. So Adobe hit the low, the super low of 292.14, right? So when Adobe hit 292.14, that was the absolute low, and that's going to be the bounce, right? So I want to wait for that bounce to come right back up here. So when this is the reversal, because you can see clearly the reversal candle right here, the three white soldiers right there, and then the move to the upside. So what happens is I waited for this move. I waited for this move to happen, right? So around this candle here at 1250, we're looking at this right here. Give me a quick second. I gotta pause this video. I gotta cough. Hold on. Sorry about there. I had to cough and sneeze there. I still got a little bit of the Rona. So I waited for this move. I waited for this move to come right back up. When this candle hit, because what is this zone right here? Let's go over to the drawing tool. This is back to 297. So where's 297 here? 297, that's resistance. So look at the resistance here, right? That's a resistance zone right there, right there, right there. That candle, that candle, that candle, that candle broke through right there. Resistance again, which is, resistance, resistance, right? So 297.50 is resistance. So when it hit this candle right here again, when it got up here, I took that short position once again because that's resistance, right? Look at where we're opening up at 296. So I went in and got a 295 put, and I rode it all the way down to here, and I got out. So that was at 293.02. So right there, what a beautiful trade that was from here in that box, right? And I wrote it right down. That was a good hour. So right from here, so let's say around, it was like 1250, it was like 1251 all the way to 2 o'clock, right? So that was a good 2 hours and 10-minute trade. And I stayed in it that long because, well, why did I stay in it that long? There's the 20, right? It hit overhead resistance multiple times for the day, right? It's above the 20 right here, but the 20 is turning. The 200 is sloping down. This is overhead price action resistance. I took that trade and walked the stock down and got out. So this is above the 20, but you see here how quickly it comes right back in, touches the 20, and goes under the 20. This is what we want. We want it to go under the 20. When it's under the 20, that's a beautiful short position. And because the 200 is underneath it, it's squeezing it, but the 20 is dominant in this particular time frame because The 200 is sloping down. The 20 is above the 200, but pushing the stock down. And it's stronger, it's dominant because it's intraday. So that is the window and the pockets that we're looking for. And that's when I took that trade. So, and as you see on social media, that was a very, very, very nice trade. So my members asked me, what was I looking at? Why did I take that trade? So I'm explaining to you what I was looking at, what I saw, and also you see here on the 6-month 1-day chart. Well, look at what I'm looking at. Here's the 200. Look at the slope of the 200. It's flat, but its resistance, right, pushing down on this stock, broke out, quickly came right back down, and look at the 20. So not only is it under the 200, it's under the 20, and right here the 20 is breaking to the downside. So this is a ski slope pattern breaking to the downside. With a 200, that's also like a cross-country ski slope, but it's going to turn into like a downhill ski slope, and it's going to be moving quickly. Now, if you're wondering, well, what is your indicator suite? What is this telling you? Well, this is the RSI right here. This is the MACD with histogram, and this is money flow, right? So I'm looking at how much money flow came out of this, come out of Adobe, $13 billion in 1 day, right? That's institutional selling. That's institutions saying, I got to get out of this. I got to get out of this stock. It's overvalued. They bought one of their biggest rivals, which was overvalued, and they overpaid for it, and their own stock is diluted. Institutions said, oh my God, I got to get out, right? So here's your RSI. It's right at 21. So it's past that support, and it's dipping to the downside. And MACD with histogram is a momentum, right? And look at the momentum. It's gaining traction. It's under the 0 line, and it's gaining traction right here. These bars are painted bigger. This histogram, this thing is going to be going like this, right? This thing is going to go down here probably to about 15 before it tries to correct itself. But the money flow never lies, right? Money flow is money, transactional notional value going in or out of a position. And who controls that notional transactional value? That's institutions, right? That's prop firms. That's hedge funds. That's big boy and big girl money, right? So that's what it's telling you, right? This is bearish. Now, Adobe's going for a ride, and it's going for a ride on the downside. So that's what I looked at, and that's why I took that trade. All right. So if you want to see what's going on, let's go down to the 1 day. So if you want to look at what's going on here, if you want to look, let me clear this chart here. Let me remove this drawing. We're looking at next week's implied volatility and next week's move on Adobe. So September 23rd, 2022, in 6 days from now, Adobe is supposed to move plus or minus $15.24. So you want to map that out? Let's map that out, and let's see why we should maybe take Adobe or maybe not take Adobe. So $299.50. Let's go into the bull side first, plus $15.24. So Adobe's supposed to go as high as $314.74. So let's come back over here to the chart. 314.74. I'm going to volatility map this out for you. 314.74. And I'll make it bang on for you precision type traders. All right? 374 or 314.74. All right? Let's get the calculator out. 299 50 minus 15.24. What does that give us? 284.26. 284.26. 284. We put that there, and 284.26 for your precision type traders. So there's the volatility mapping for Adobe. There's the price action, sorry. So let me come over here. Now, what am I going to do? Well, I'm going to draw the box once again. So let's come over here. And the last hour, so 3 o'clock, where was the high? Right here, 300. So let's map that out. Where was the low? In the last hour, 200. It's turning. So right around here, the low was 297. So let's map that out. Where was the close? Close was 299.50. So let's map that out. Let's change that, not activate it. Let's edit. 299.50. So here's my box. Let's draw out the box for you. This is the volatility channel that we're going to be looking at for Monday, September the 19th. There's the volatility box right there, right? 300 to 284. Where is Adobe supposed to move? 314 to 284. So what would I be looking at doing? Well, I'm coming over here to the 6-month 1-day chart, and I'm looking at that. And I say to myself, 284, this could be a very viable, if Adobe wasn't so volatile. But we love volatility because we can either buy it and sell it, so it doesn't really matter. I'm looking here at the lower end of if you're wondering what this is the volume profile. So I'm looking down here. This is where institutions, well, they're not coming back in here, but this is when institutions are looking at, this is the discount, right? So this is the lower end of the volume profile point of control. And this area right here, this would be called a discount for institutions to get themselves back in. There's very little liquidity down here, but there's a ton of overhead supply right here. So if you think Adobe is going to be going back up, they've got to bust through all of this liquidity right here. Then right here, there's no liquidity. So that's basically going to be a pause and some resistance right there before it gets back to the lower end of the channel at the point of control. This is the point of control. This is where institutions usually look at buying, but there's so much overhead supply right here, and this is all resistance to get back up. We don't know what's going to happen. So, and because we're in a bear market, Adobe, by all rights, should be taking a haircut anyways. So if I was looking at getting this position here on Adobe, let's come over here and look at Adobe. Adobe is trading right now at 29 times earnings, which is, for that particular market, it's a little bit outrageous. So Adobe should be getting, when it corrects, Adobe should be getting corrected down to about a 15 multiple, a 12 to 15 multiple in that particular area. So let me look at this. If I was going to take a position on Adobe, full well knowing what the price action could possibly be, I would be looking at taking something like, well, let me look at what institutions are doing. So let's come over here to price, action, and sales times. Sorry, option time and sales, because this doesn't lie. What are people doing? Well, at 2:30, someone bought the November 18th 310 call. So that's 1,000. That's a big boy trade. Let's analyze that. That's 1,000 times. What was that? Wow, 1383 times 100. So that was $1.38 million that somebody plunked down on Adobe to be going up to 310. We can analyze that. Do I want to analyze it right now? I want to keep the video kind of short. I can say that for another day. So let's look down here and see what's going on here. Time and sales. I want to see what the latest time and sales were. 230, 310 put. So that was a big boy position right there. It's 1,000 taken right there. So let me look at this. A lot of call action. 21, 310. So it's deep in the money. 270. That's January 24th. Wow, it's a whole year and a bit out. All right. Let me come over here. 284. That'd be the low. I think I would be comfortable. We're at 299 right now. I think I would be very comfortable sending out a trade to my group, and I'm looking at this right here. And which is what I did take. I took the 290 right here. Expiration. But right now that's 320 and 350. That's a 30-cent gap. That's a wide. You can drive a truck through that. It's about 30 cents all the way through. This one's 20 cents. That's 275. That's too low. I wouldn't want to sell premium if I was going to go out that low, but it's a short dated option. So if I was going to buy some volatility, what are we looking at for vol? 58% vol, $15 movement. So I'd be comfortable. 287.50. I think I would be comfortable. 320. Yeah, I would be comfortable sending out this position here. Either the 287.50 or the 290 put. I'd be comfortable sending out to my guys next week, my guys and my girls. There's enough volume at the end of the day to be able to justify taking this position. It's already up 12% and Adobe's on a downward slide. So I could even do, no, I wouldn't do, actually, I wouldn't do any 285 because there's no open interest on that one. And only 200 contracts traded. 280, that's too far out of the money. It's already negative. It's already down 1%. That's too far out of the money. That's when you kind of want to sell some premium. But if the Adobe is going on a downward slide, you don't want to be getting chopped up selling premium and buying all that vol in case the Adobe goes for a real slide, right? So, I mean, you could, on the call side, what are we looking at here? On the call side, what is that, 280? So on the call side, 315, so 314, that was the top end, so 315. What am I looking at here? 20, no, I want to go with a delta of 7 if I'm going to sell some premium. There's enough volume there. No, I think I'm going to buy the put. So I'd be comfortable selling this put, 290 or the 287.50. No, the 290, sorry. I'd be comfortable selling that out. So that's what I'm looking at when I looked at Adobe. That's why I took that trade. So for my Platinum X Power option traders, this is what I'm looking at, right? You see what I'm looking at. You see why I took that trade. You're seeing the box that I drew out. You're seeing the 20, the 200. You're seeing everything come together, and you're seeing what's happening. So when you watch this coaching call, look at Adobe in pre-market and map out the box, and you'll be quite surprised to see what you want to do. So, in summary, if Adobe opens up under this box, we're going short. If Adobe opens up slightly above the box, we're going to go for a long position, and that's going to be a short long position. So that could be literally a 5-10 minute trade. If Adobe opens up inside of this volatility box, a couple different things. You got the capital to short. I would look for a short position depending on what the 200 and the 20 is doing, right? Or you wait for the bell to open and take your option position. So I hope you found this valuable. I hope you guys and girls understand and see what I'm looking at. Oh, and by the way, that's when that right there is my 295 put that you see on social there. That's when I locked all that up. So I hope you understand and see what I'm looking at, what you should be looking at, what you should be doing when you're mapping out support and resistance, price action, mapping out the volatility, right? You're mapping out the volatility channel, the volatility energy, so you know how Adobe can move, because Adobe's got some movement, right? It's super volatile. So that's it from me. That's it from Double P. This is how we make our money. This is how we make our money pretty much every day when we're trading. This is what I look at every day. I map everything out. I always map it out. If you don't map it out, you don't have a trading plan. You don't have a trading plan, you're gambling when it comes to intraday momentum option scalping. You're just gambling, or you're guessing. Either way, A or B, you're going to lose. You're going to lose money every day. You're going to lose money hand over fist. You're not going to be able to trade. Trading plan, rules of engagement, trading strategy, right? Trading plan, support, resistance, profit taking, stop loss. Everything's tight, right? That's what I do. That's what I'm teaching you to do. For those of you that are not in the Platinum X Power Option Trader group yet, or system, come on board, right? Somewhere in this video, you're going to see a link, right? Click on the link, head on over, get and be a part of the group, right? Let me lead you. Let me help fix some of your mistakes that you're making. If you're making mistakes, if you're making big mistakes, I can help you, right? You're making little mistakes, I can help you. I can optimize you, right? That's what we're looking at. There's your volatility price channel right there, right? You see how tight Adobe's trading. So that being said, my name is Double P. The video is a little bit long. I'll see you guys next week, and take care.